What's up everybody, Brad here with the Money Dad channel. In this video I want to go over my thoughts for the stock market for this coming week, starting March 29th through April 2nd, I believe it is. That's Friday of 2021. So looking at the chart right here of the S&P 500, pretty bullish on this chart. You can see we are going from the bottom left to the top right. That is just in general a bullish looking chart. There's a big reason why I am super bullish for small caps coming up in this week, and I will get to that in a moment in this video, but I want to kind of lead up to it, my reasoning why and how I got to that conclusion, how I found that. So I want to start with the S&P 500 because that's where I started with my analysis when I started looking into what I was trying to figure out for this coming week. So I started here. I'm looking at this chart, and I'm just trying to get a general idea of how do I feel about this chart. It looks really good. We're going from the bottom left to the top right. That's a bullish looking chart that we're heading in the right direction. The trend lines look good. We have higher lows, we've got higher highs. The market hasn't felt great over the last, I don't know, few weeks to a month or two, right? Because these dips have been pretty, they've hurt, but the overall market has been going up. Even though these dips have been hard, we come back, we head a little bit higher than last time, and we dip again, and then each time we dip, it's just not as deep as the last dip, right? You can see like this low right here is just not quite as low as the last one, right? Look, you got a low right here, we head up, the next time we come down, it's just not quite as low as this one, right? And then we head up from there, and we come down, and it's not quite as low as that one, and then we head up, come down. This one significantly higher than that one. It's not even close. So that is an uptrend, right? And then when we look at the highs, you have the same thing going on. You've got these sets of highs right here, right? And then we dip down, and then we come up. You got a new set of highs that are higher than the last one. You head down, you come up, and you got a new set of highs that are higher than the last one, right? And so forth. So this is an uptrend. This is bullish activity. It looks very good. Now, that said, this is the S&P 500, which is a good, kind of judgment or baseline index for the stock market. But the stocks that we look at on this channel are mostly small caps. Not everything, but a lot of stocks that we've been talking about lately, the chart patterns that we've been talking about lately have been on small cap stocks. So let's look at the Russell 2000 small cap index. This is the Russell 2000, stock ticker IWM. What do we have going on here? It's similar. It's not the exact same chart. It's similar though, right? You got a higher high than the last one. This low is ever so slightly higher than the last low. It is very, very slight, but it is higher than the last one, so it is kind of an uptrend, right? It does look like we are chopping sideways, but it is just ever so slightly an uptrend. Look at this blue line down here. You can see when I pull the mouse away, when you compare it to this gray line in the background, that bottom blue line is ever so slightly heading up, right? So it is a slight uptrend. That is not why I am super bullish about this week, because that is just the most slight uptrend, right? That you can make money bouncing off that uptrend over the long term, but you're not going to make a lot of money, right? If you assume that that's the trend that you're going to make money on over the long term, it's just so slight that you're not going to make a ton of money over the long term. But this is why I am super bullish this particular week. And let me caveat this with how I found this. I saw that on Friday of last week, to close out the week, on the 15-minute chart, I had to bounce all the way down into the 15-minute chart on the S&P 500. I'm going to bounce back to the S&P 500 just for a moment and then tell you why I'm super bullish on small caps. I saw on a chart that in the last few minutes of the trading week last week, we ripped to the upside. Ripped. Right? Look, this is March 26th starting right here, right? So starting right here, this is Friday. Right? So we start the trading day right here. We have a good up day. It's bouncing up and down, but it's a good up day in general. And then this candlestick right here is the last 15 minutes. I guess there might have been one more candlestick right there. So maybe the last 30 minutes of the trading day. We go from right here all the way to up here. Just absolutely crazy bullish move to the upside. Super bullish. And you don't see that when you look at daily candlesticks. All right, when we're looking at this candlestick right here, yeah, it looks like a great move to the upside. Fantastic move, but you don't know that that move is in the last 30 minutes of the day unless you bounce down into that 15-minute interval, right? Then you see, okay, we're just kind of chopping sideways for a good chunk of the day, right? This is the beginning of the day right here. This is mostly sideways to slightly up and then just boom to the upside at the end of the day. So why is that significant? Well, it's significant because I had to jump down into the 15-minute intervals to find this, because I saw that there was bullish activity at the end of the day. And when I did that, it opened my eyes to new chart patterns that I would not have seen on the daily candlesticks, right? When you're looking at the daily candlesticks, you see these waves up and down, up and down. You're in this channel. It's looking good. It's a bullish channel. But what you don't see are the waves in between those big candlesticks. Like, for example, what do we have right here? There's a shoulder, there's a head, there's a shoulder, boom, explosion to the upside. That is an inverted head and shoulders on the S&P 500 that is extremely bullish, and it's already started breaking out, and there's still more room to run. Now, why am I bullish on small caps when I saw the inverted head and shoulders on the S&P 500, which is an index for large caps? Well, let's click over to our small cap index. It's because, excuse me, let's zoom out here a little bit. What do you guys see here? We see the small caps are rolling over. They're heading down. We have this bear trend. And now what do we have here? There's your neckline. There's your bear trend. You break below the neckline, come up, touch it, come down. There's your head. Come up, touch it. There's your shoulder. And where are we at right now, fellas and ladies? Some ladies out there watching this channel. We have touched the neckline, not quite broke through it. But if we start Monday or even Tuesday, even if we take a breather on Monday, maybe it takes until Tuesday, who knows, and break through this neckline right here, head to the upside, maybe we come back and touch it, we're going to blast off, my friends. It is an extremely bullish chart pattern. Inverted head and shoulders are extremely bullish. They have pretty good probabilities of reaching their price target. So I'm going to give you guys a price target in this video. I'm going to do it right now on the small caps. So this is going to be bullish for small caps particularly, but it should also be moderately bullish for the entire stock market. Because if small caps are going to do this well this week, then the entire stock market should do at least moderately well. I would be extremely surprised if small caps did this well and large caps declined or just did nothing. That would be some pretty extreme divergence between large caps and small caps. So I do think that the entire stock market is going to do at least moderately well this week, and I think small caps are going to do extremely well. And I can even give a specific price target on the Russell 2000 for this week based on this inverted head and shoulders pattern. All right, so let's do that because it's pretty easy. It is pretty easy. This is this stock chart pattern right here. I mean, all we got to do is measure the depth of the head and add that depth to the breakout over the neckline, right? So let's get a little bit more accurate of a neckline. Let's say we've got our shoulder right there. We've got a shoulder right there, right? Or sorry, these are the shoulders, right? But this is the neckline where it touches. This is our head. So we measure that depth of the head and add it to the breakout above the neckline, and that's how we get our price target. So it's not terribly difficult to do this kind of stuff. You just got to know, that's how it works, right? So let's go ahead and grab our price range tool. I used to use this measuring tool, but it wouldn't stick. The measurement wouldn't stick. I would have to keep redoing it after I measured right here and then redo it over here. But if I do the I just found out, this is tradingview.com, by the way. If you use the price range tool, you can measure a price range such as the head up to the neckline, which is how we measure a head and shoulders breakout or a price target, which it looks like it's going to be pretty close to exactly $12, right? And look, when I click that, it sticks, right? It sticks. So that's nice because when I use the measuring tool, it wouldn't stick before. So now that it has stuck, I can go ahead and click it, copy, paste. Now I have two of them, which is super nice. Long-term viewers of this channel know that I used to do this twice instead of just copy and pasting. So this is a nice little handy tool right here. By the way, what I was saying earlier is this is the price range tool right here in TradingView. So a little bit more convenient than the measurement tool looking thing right here. Okay, so you copy and paste it. You get your almost exactly $12, right? And we are just going to, what did I do there? Sorry. I made one too many measurements. So we're going to grab the measurement that we made a copy of. Why don't I just delete that one to clean up the screen so that we're not confusing anyone. Let's grab our copy, pull it all the way up here, add it to our breakout because that's where we're measuring from, right? And we get a price target. It's roughly 5.5% to the upside of where we're at right now on small caps, right? So that is significant. That is going to be a major week if we hit that this week, guys. I mean, a 5.5% move to the upside on small caps in 1 week is significant. I mean, small caps do move more than large caps, for sure. So it's not an absolutely massive, like unprecedented move, but 5.5% to the upside is still a serious weekly move, even for small caps. Anyway, we're talking about heading all the way up to $232 on the Russell 2000 this week at some point. We're currently sitting at $220 for the Russell 2000, so pretty significant move, guys. Like I was saying earlier in the video, we could break through this neckline. Typically on these head and shoulders, you see a breakthrough of the neckline, a retracement to the neckline, and then a test. You test that neckline, right? You come back and test it, then head up to your price target. So it might look something like that over the course of this week, right? So maybe we have an up day on Monday, a down day on Tuesday, and then Wednesday, Thursday, Friday, kind of a blast off mode. I don't know that it's going to happen exactly like that, but this is an inverted head and shoulders. This is how they typically play out. They don't play out like that every single time. Sometimes they just head straight to their price targets. And also sometimes when they head straight to those price targets, they drop immediately after they hit those price targets. So be wary of that. I'm not saying that this chart pattern is extremely bullish for the long term in the stock market. I'm saying this is a bullish look for the short term, or at least medium term, like the next week, right? This chart pattern does not mean that we are heading up in the stock market for the next few months. It's just a bullish chart pattern for the next week, maybe 2 weeks if it takes a while to play out, maybe a couple days, somewhere in between there. I would give this range for this to play out anywhere between a couple days to 2 weeks, just to give it a little bit more, I don't know, room on either side, right? Because this head and shoulders right here, this inverted head and shoulders took 1, 2, 3, 4 trading days to play out. So I would expect it to be similar on the next leg of it. So 4 trading days, so round that to about a week. And then if you give it a little extra room on either side, some wiggle room, you could say, hey, this could play out anywhere between 2 days and maybe 2 weeks, something like that. So not super bullish like long term on the stock market based on this chart pattern. All that said, look, I am bullish on the stock market over the long term. What I'm getting at here is this chart pattern right here is not the reason why. Okay, this chart pattern does not mean the stock market is bullish over the long term. It just means, hey, over the next 2 weeks, we should see, at least in the small caps, some pretty nice upward activity, okay? And again, this is a probability play. Doesn't mean it's definitely going to go to 232, here in the next week or two. It just means that there's a pretty high probability that we will, okay? So guys, I am bullish long term, not because of this chart pattern, but I am bullish in general long term. Now, short term, I am bullish because of this chart pattern, especially on small caps, right? So this is a small cap index that I'm following this chart pattern on. So I do think small cap stocks should do exceptionally well this week. I hope so anyway. Everybody out there that's watching this video and channel, I assume that you are invested long in the market. Maybe some of you aren't. Maybe some of you guys are shorting the market or whatever. But we talk mostly on this channel about going long on stocks, or some of you guys like to do the options and you buy call options to go long. However you want to play it. So I do think that the stock market goes up over the long term in general. So I'm going to be, looking for reasons why we're bullish on this stock market. And this is a very, very good reason why. All right, this is a nice channel that we're in, upward channel. And in that channel, man, look at that. That got all jacked up, huh? Let's just go ahead and fix that right there. Nice channel right there. And in that channel, we have a nice inverted head and shoulders that should have us blasting to the upside in this coming week. Okay, guys, that's what I've got for this coming week. I hope you enjoyed it. Let me know down in the comments if you did, if you have some kind of different analysis as I try to fix this graph so it doesn't look like total garbage. Let me know in the comments below if you have some kind of different analysis, if you see something different, or just, hey, look, if you enjoyed this video, hit that like button. That would help me out a lot. Subscribe to the channel if you're not a subscriber yet, and consider joining the channel as a member to see my trades and my real-time thoughts on my investment decisions in YouTube community posts. That would help me out a lot, my channel, my family out a lot. Really appreciate all that. Okay, guys, so that's what I've got for this video. I'll see you in the next one. Have a good week. Bye.